What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 15 free stocks, Moo is going to give you up to 15 free stocks when you open a new Moo brokerage account. You put $100 in that brokerage account, they're going to give you 5 free stocks. You put $1,000 in that brokerage account, they're going to give you 15 free stocks. Limited time offer. Act today. Don't delay. Get down in that description box and click on that Moo link. Go get your free stock. Go get that free money. Well, guys, the stock market, or the broader stock market, closed a little bit lower today. And we got the CPI inflation report for September, and I think that had something to do with it because it wasn't great, it wasn't bad, it was sort of like lukewarm. But the big key that I took from the inflation report for September was inflation is still not going up rapidly. And you got to understand, Federal Reserve has 2 major mandates. First one is price stability, which is keeping inflation down. And then the second one is maximum employment. Now, they've already tamed inflation. So they've turned their scope onto jobs, right? The labor market. Remember, prior to September's jobs report, 3 months prior to that, or the 3 reports prior to that, the labor market was weakening. We were adding less and less jobs to the economy. So, yeah, they've turned their attention to the labor market. And that's why I still believe the Federal Reserve is going to still reduce interest rates by 25 basis points in November. They're going to also reduce again in December. Why? Because they're trying to make sure that this labor market doesn't weaken. But let's dive into how the stock market reacted to the September CPI inflation report. Stocks declined Thursday, with the S&P 500 and the Dow Jones Industrial Average falling from records as economic data pointed to stubborn inflation. The broad market index lost 0.21% to settle at 5,780.05. while the Dow dropped 57.88 points, or 0.14%, to finish at 42,454.12. The NASDAQ dipped 0.05% to end at 18,282.05. Clearly, today is being driven mostly by the CPI report, said portfolio manager at Cookson Pierce. Not a huge surprise in most respects, but some of the underlying data is clearly a little bit hotter than anyone would prefer. On the margins, people are selling off small and mid-cap stocks that are a little bit more rate sensitive. While Wall Street digested September's consumer price index, which rose 0.2% on a monthly basis, bringing the annual inflation rate to 2.4% from the previous year, that came in ahead of the 0.1% monthly gain and the 2.3% year-over-year rate expected by the analysts polled by Dow Jones. The year-over-year number is the lowest since February 2021. After the hot CPI inflation report, Atlanta Fed President Raphael Bostic told the Wall Street Journal he was okay with standing put on November's rate meeting instead of cutting like the market wants. This choppiness to me is along the lines of maybe we should take a pause in November. I'm definitely open to that, Bostic told the paper. The data comes as concerns mount that the Federal Reserve may slow the pace of future cuts, and ahead of central bank's first policy meeting after September's supersized move. The Fed funds futures trading data suggests roughly 85% likelihood of a quarter percentage point cut. And here's the reason I believe, guys, there's going to be a cut. Back to what I said earlier about the labor market. One report in 4 months is not good enough to suggest our labor market is not weakening. You got to go back 3 months prior to the September report, which showed a clear and gradual decline in jobs being added to the economy. It also shows a clear uptick in unemployment. Look at what happened as of the October 5th weekly jobless claims, 258,000 of them. So in my opinion, if you're switching your focus from inflation to maximizing employment, in order to save the labor market, you got to reduce rates. And I think that's what will happen. Now, let's take a look at one of my main big boy blue chip paper assets, which is NVIDIA, because that's sort of who I like to hang my hat on when I'm thinking about individual stocks, because you guys know I'm a big ETF guy. But when I think about individual stocks, this is what I like to kind of hang my hat on. So NVIDIA closed at 134.81 today. They actually got to 135 as their high today. Their low was 131. They opened at 131 and they closed again, like I said, at 134.81, almost 135. So here's the thing. This is what I'm asking myself. Tomorrow on Friday, do they take profits? Do investors take profits tomorrow on NVIDIA, or do they stay a little longer, right? Because I've always said, if we can manage to get through Friday above 130, I think going into the following week, we have an opportunity to go to 140. That's just my opinion, guys. I'm not a financial advisor. This is not financial advice. I'm not trying to tell you what to do. I'm just giving you my opinion and my prediction on my YouTube channel. So tomorrow is going to be pretty interesting, Friday, to see how NVIDIA does. Will there be profit taking, and will we see the stock price, decline? Or will we continue to see this run that we've seen over the last week or so? Very interesting. I'm going to be around to find out. Do me a big favor, down in the description box, why don't you guys tell me, what do you think will happen with NVIDIA tomorrow on Friday? Do you think it'll sell off, or do you think the rally will continue and take us all the way into next week? Love to get your feedback on that. If you want up to 15 free stocks, guys, you got to get down in the description box and click on the Moomoo link. When you open up your Moomoo account, you put $100 in there, they're going to give you 5 free stocks. You put $1,000 in your Moomoo brokerage account, they're going to give you 15 free stocks. Now, guys, this is a limited time offer. You got to make your deposits when you open the account. Hey, man, don't delay. Act today. Go get that free stock. Go get that free money. Get down there and click on that link today. If you want to, guys, do me a big favor. Go stop by my website, www.richardfain.net. Second link down in the description box. Man, we got some fantastic digital products in there. Matter of fact, we got 10 of them. World-class digital products that can help you collapse time frames, get your confidence level up, because you're going to be knowledge. The more knowledge, the more confidence you should have, the more you execute, right? So go check out those digital products and make an investment in yourself and get yourself to your pot of gold faster. Also, while you're there in the website, consider joining the fastest growing financial community on Patreon. We're called the Wealth Builders. We got 1,000 Wealth Builders in less than 5 months, guys, and we're moving to 2,000 by the end of this year. So come join us. We help each other do what? Build wealth. None of us are experts. We're ordinary people who help one another build wealth through tips, best practices, golden nuggets, helping provide financial confidence and helping just foster a financial community that's conducive to people who invest long-term in big boy blue chip paper assets, and we build wealth. That's what we do. If you want to be a part of that, come join us. Just click on that join button or that membership button inside of the website and come on over to Patreon and join the fastest growing financial community on Patreon. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace.